The world of financial trading is complex. Traders need every edge they can get. Technical indicators are tools that help traders make sense of market data. One such indicator gaining popularity is the Arnaud Legoux Moving Average, or ALMA. ALMA is a powerful tool that can enhance trading strategies. It provides valuable insights into price trends and potential trading opportunities. In this exploration of ALMA, we will delve into its calculation methodology, explore its advantages over traditional moving averages, and examine its applications in various trading strategies. Whether you are a seasoned trader or just starting, understanding ALMA can be a valuable asset in your trading arsenal. Unlike traditional moving averages like the simple moving average and the exponential moving average, ALMA uses a unique calculation method. This method involves a Gaussian filter. This filter helps to smooth out price data and reduce lag. The ALMA calculation takes into account three key parameters: length, offset, and sigma. The length parameter determines the number of periods used in the calculation, similar to other moving averages. The offset, ranging from 0 to 1, dictates the emphasis on past or current price data. A higher offset gives more weight to recent prices. Sigma controls the smoothness of the ALMA line. Traders can adjust these parameters to suit their trading style and the time frame of their analysis. This customization is a key advantage of ALMA. It allows for greater flexibility in adapting to different market conditions. ALMA offers several advantages over traditional moving averages. One of the most significant advantages is its reduced lag. Lag refers to the delay in an indicator's response to price changes. Because ALMA gives more weight to recent prices, it reacts more quickly to price movements. This responsiveness makes it a valuable tool for traders who need to make timely decisions. Another key advantage is its smoothness. ALMA's Gaussian filter helps to smooth out price fluctuations, producing a cleaner trend line. This smoothing reduces noise and makes it easier to identify the underlying trend. Traders can then make more informed trading decisions. Finally, ALMA's customizability is a major advantage. Traders can adjust the length, offset, and sigma parameters to fine-tune the indicator to their specific needs. This adaptability makes ALMA a versatile tool that can be applied to various trading styles and market conditions. Trend following is a popular trading strategy that involves identifying and capitalizing on established price trends. ALMA can be a valuable tool for trend followers because its reduced lag and smooth trend line provide clear buy and sell signals. Traders using ALMA in a trend-following strategy would typically look for price crossovers above or below the ALMA line to identify potential entry and exit points. For example, a buy signal would be generated when the price crosses above the ALMA, indicating a potential uptrend. Conversely, a sell signal would occur when the price crosses below the ALMA, suggesting a potential downtrend. It's important to note that trend following with ALMA, like any other trading strategy, should be used in conjunction with other forms of analysis, such as price action and volume analysis, to confirm trading signals and manage risk. Breakout trading is another popular strategy that involves identifying and taking advantage of price breakouts from established trading ranges or chart patterns. ALMA can be a useful tool for breakout traders because it can help to identify potential breakout points. One way to use ALMA for breakout identification is to combine it with other indicators, such as Bollinger Bands or Keltner channels, which define volatility bands around the price. When the price breaks out of these bands, it often signals a significant move. ALMA can be used to confirm the breakout and provide additional confirmation. Traders can also use ALMA to identify potential breakout points by observing its slope and distance from the price. A steepening ALMA line that is closely following the price suggests strong momentum and a higher probability of a breakout. Section 6. Mean reversion strategies and ALMA. Mean reversion is a trading strategy based on the idea that prices tend to revert to their average or mean value over time. ALMA can be a valuable tool for mean reversion traders because its smooth trend line can help to identify potential overbought and oversold conditions. One way to use ALMA for mean reversion trading is to combine it with an oscillator such as the Relative Strength Index, or RSI, or the Stochastic Oscillator, which measure momentum and price extremes. When the oscillator indicates overbought or oversold conditions, Traders can look to the ALMA to identify potential entry points for mean reversion trades. For example, if the RSI indicates an overbought condition and the price is pulling back to the ALMA, this could present a potential short trade opportunity. Conversely, if the RSI indicates an oversold condition and the price is bouncing off the ALMA, this could signal a potential long trade opportunity. Section 7, ALMA in action, a stock market example. Let's look at a real-world example of how ALMA can be used in trading. Imagine a scenario where a trader is analyzing the stock of a technology company. The stock has been trending upwards, but there have been some recent pullbacks. The trader wants to know if the uptrend is still intact and if there is a potential buying opportunity. The trader decides to use ALMA to help them make a decision. They plot the ALMA on the chart with a period of 20 and an offset of 0.8. They also add the RSI indicator to their chart to gauge momentum. The trader notices that the ALMA is still sloping upwards, indicating that the uptrend is still in place. They also observe that the RSI is showing an oversold condition, suggesting that the recent pullback may be overextended. Based on this analysis, the trader decides to buy the stock. Their decision is based on the combination of the ALMA's indication of an uptrend and the RSI's signal of an oversold condition. This example highlights how ALMA can be used in conjunction with other indicators to identify potential trading opportunities. Section 8. Combining ALMA with other indicators. While ALMA is a powerful indicator on its own, it can be even more effective when combined with other technical indicators. This combination allows traders to confirm signals, filter out false signals, and improve the overall accuracy of their trading decisions. One popular combination is using ALMA with momentum indicators, such as the MACD or the stochastic oscillator. These indicators can help to identify overbought and oversold conditions, while ALMA can provide trend confirmation and potential entry and exit points. Another effective combination is using ALMA with volatility indicators, such as Bollinger Bands or Keltner channels. These indicators can help to identify periods of high and low volatility, while ALMA can provide trend direction and potential breakout points. Section 9. Conclusion, Backtesting, Optimization, and Risk Management. In conclusion, the Arnaud Legoux Moving Average, or ALMA, is a valuable tool that can enhance trading strategies by providing a clearer understanding of price trends and potential trading opportunities. Its reduced lag, smoothness, and customizability make it a versatile indicator that can be applied to various trading styles and market conditions. However, it is crucial to remember that no trading indicator, including ALMA, guarantees success. Traders should always backtest their strategies thoroughly before implementing them in live trading. Backtesting involves testing a trading strategy on historical data to evaluate its performance and identify potential weaknesses. Furthermore, optimization is essential to fine-tune trading parameters and improve the strategy's effectiveness. Risk management is paramount, and traders should always use stop-loss orders and position sizing techniques to protect their capital. By combining ALMA with sound trading principles and a disciplined approach, traders can increase their chances of success in the financial markets.